Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. UK political crisis deepens as Starmer's chief of staff resigns. 2. Japan LDP wins historic supermajority in snap election. 3. NFP delayed to Wednesday as Fed data blackout frames week. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. UK political crisis deepens as Starmer's chief of staff resigns. Primary asset classes impacted: GBP/USD and sterling crosses, UK gilts, 10Y, 30Y, FTSE 100 and UK banks, UK political risk premium broadly. What happened? Prime Minister Starmer's chief of staff, Morgan McSweeney, resigned Sunday over the Epstein-Mandelson scandal, accepting responsibility for advising the ambassador appointment. Eurasia Group now estimates 80% probability of a leadership challenge and Starmer's ousting this year, up from 65%. Metropolitan Police opened criminal investigation into Mandelson over claims of passing market-sensitive information. Starmer addresses Labour MPs Monday. Why it matters. The resignation of Starmer's most senior advisor signals irreparable damage to his premiership, with Labour MPs openly calling for him to step down. Sterling and gilts face renewed political risk premium reminiscent of the trust crisis, particularly given already weak economic fundamentals and record-low approval ratings. A leadership contest would create prolonged uncertainty over UK fiscal policy, public spending, and regulatory direction. Reform Party stands to capitalize, potentially reshaping UK political landscape and investor sentiment toward UK assets. Key numbers to remember. Eurasia Group estimates 80% probability of leadership challenge this year. 81 Labour MPs required to trigger formal contest. Mandelson accused of leaking government emails and market-sensitive data to Epstein. Payments totaling at least $75,000 under investigation. UK 10-year gilt yield rose 3 basis points Thursday to 4.58% before BOE Hold pulled it back to 4.54%. What to watch next? Starmer addresses Labour MPs Monday in what amounts to a survival speech. Failure to contain rebellion accelerates leadership challenge timeline. Sterling and gilts will price political risk at European Open, with GBP over USD vulnerable to break below recent support if resignation calls intensify. Parliamentary committee review of Mandelson documents expected within days could trigger further revelations. May local elections serve as hard deadline for Labour patience, but some MPs indicate Starmer may not survive that long given scandal momentum and public anger. 2. Japan LDP wins historic supermajority in snap election. Primary asset classes impacted: Japanese equities, Nikkei 225 topics, JGBs, 10Y, 30Y, USD/JPY, Asian regional equities, global defense sector. What happened? Prime Minister Takaichi's LDP won 316 of 465 lower house seats Sunday, its best result since 1955. With coalition partner Japan Innovation Party adding 36 seats, the government holds 352 seats, a two-thirds supermajority enabling constitutional override of the upper chamber. Takaichi campaigned on sales tax suspension on food, record defense spending, and confrontational China stance. Why it matters. The supermajority removes all legislative constraints on fiscal expansion, raising debt sustainability concerns given proposed tax cuts and defense buildup beyond 2% of GDP. Bond markets face supply pressure as fiscal loosening demands greater JGB issuance, potentially steepening the yield curve and testing BOJ tolerance for rising long-end rates. Takaichi's mandate to rewrite Japan's pacifist constitution and confront China introduces geopolitical risk premium to regional assets. Currency implications are two-sided. Fiscal stimulus supports growth, but debt expansion may pressure yen confidence. Key numbers to remember. LDP won 316 seats, highest proportion in post-war history. Coalition total 352 of 465 enables constitutional override. Sales tax suspension on food is immediate fiscal priority. Defense spending targets 2% of GDP, highest since World War II. Trump endorsed Takaichi and plans White House visit. Confrontational China and Taiwan stance reshapes regional security posture. What to watch next? Monday, Asian session prices the supermajority, with Nikkei likely supported by fiscal expansion expectations, while JGB long end faces selling pressure on debt concerns. Takaichi's first post-election fiscal policy announcements will determine pace of sales tax suspension and defense budget timeline. USD/JPY reaction depends on whether markets focus on growth-positive fiscal stimulus or debt-negative fiscal loosening. China's response to Takaichi's constitutional revision mandate and Taiwan rhetoric could introduce additional regional risk premium affecting Hang Seng and broader Asian equities over coming weeks. 3. NFP delayed to Wednesday as Fed data blackout frames weak. Primary asset classes impacted. U.S. Treasuries, 2Y, 10Y, Fed Funds Futures, U.S. Equities, S&P 500, Russell 2000, DXY and USD pairs, gold. What happened? January non-farm payrolls were postponed to Wednesday due to a partial U.S. government shutdown, removing Friday's key catalyst and triggering a sharp relief rally. Dow surged 2.5% to close above 50,000 for the first time ever. S&P 500 gained 2% and Nasdaq rose 2.2%, recovering most of the midweek tech-driven sell-off. January CP, I may also face scheduling delays. Why it matters. The data delay extends uncertainty over labor market health and Fed rate path, leaving March cut probability elevated near 23% without resolution. Friday's rally reflected positioning unwind and short covering rather than fundamental reassessment as the same binary risk now shifts to Wednesday. Government shutdown delays multiple economic releases and potentially distorts upcoming indicators through delayed collection. Combined with Powell testimony Wednesday, the week delivers concentrated macro event risk in a single session. Key numbers to remember. Dow closed at 50,116, first close above 50,000 ever. S&P 500 at 6,932, up 2% Friday. NFP rescheduled to Wednesday, February 11th at 8:30 Eastern. Consensus around 80,000 jobs versus 22,000 ADP print. Fed March cut probability at 23%. Powell testimony same day as NFP creates concentrated risk event. What to watch next? Wednesday becomes the dominant session with NFP at 8:30 Eastern and Powell testimony creating concentrated macro event risk. Miss below 50,000 jobs would sharply accelerate Fed cut bets and pressure dollar while supporting treasuries and gold. Strong report near 100,000 or above would reverse dovish repricing and trigger position unwind in duration longs. Shutdown resolution timeline affects CPI scheduling and broader data flow critical for March Fed meeting, compounding uncertainty if delays persist beyond midweek. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.